This video is long overdue, but maybe, just maybe, it is the perfect time. You guys have finally convinced me to cover NIO stock. So, do I own any? Why or why not? My quick analysis on the stock and so much more coming up next. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we're talking all things NIO stock. This one has been requested for weeks and weeks now, and I was initially hesitant to cover it because I'm not all that interested in the EV hype. I personally think a lot of people are going to get burned if they haven't already by chasing these hype names that are here today but maybe gone tomorrow. But how can you discard a stock as just hype without really doing a deep dive? So let's see, is NIO all hype or is there some meat on this one? Give me the format. First, a quick overview of NIO's business and really what they do. Second, NIO services and their battery segment, which is actually really exciting. Third, NIO's brand, how they're building it, and is it working? Fourth, their juicy-ish financials. And finally, fifth, NIO's government financing. We've got a lot to cover on this one. I promise to try and make it quick and entertaining, so let's get started with part one, NIO's business and what they do. Formed in 2014, NIO is an EV company that is bursting into the automotive industry in China. They have several car models currently available for sale, and these cars do have autonomous driving capabilities. But NIO is building much more than just cars, they are building a brand. Just like how Tesla is linked to a certain degree of high quality or pizzazz, if you will, NIO wants to be a desired brand as well. And we'll talk more about this later in the video. And as far as autonomous driving is concerned, NIO is working on their AI system, Nomi, which not only learns how to drive without crashing, which is obviously important, but it also learns about you, the driver. It learns about your habits and your interests through deep learning algorithms. I'm not really sure why I would need to do the second part other than for spying purposes. But nonetheless, I'm sure it makes the overall experience much better. As of now, NIO is working towards level 4 out of 5 autonomy in their partnership with Mobileye. One of many similarities to Tesla is NIO's ability to update and fix software over the air, and as NIO claims, they are one of the first automakers in China to have this capability. One contrast to Tesla, however, is that as of now, NIO currently outsources the manufacturing of their cars to JAC, an automobile group in China. Of course, ideally you would want NIO to manufacture their own cars so they don't have to rely on the deadlines and quality of another partner, but that also requires a lot of capital that NIO might not be willing to spend right now. Again, something we'll talk about later in the video. But after some more digging, it looks like JAC is a pretty reliable partner, and I don't see them having too many problems in the future. And lastly, one part of NIO's business that I've actually dedicated an entire section of this video to is their battery business, or what they eventually hope to become, their battery as a service business. And let's talk about that in part 2, NIO services and their battery business. Before we jump into the battery side of things, let's talk about first the services they offer. NIO offers several services along with the purchase of their cars. Some of these services are free and some are monthly subscriptions to NIO. They include things like 24-hour roadside assistance, maintenance, quality assurance, and even car washes. They also have NIO Valet, which is a service where they take your car and bring it back fully charged. And to me, this is like, yeah, that's pretty cool, but also, is it financially viable for a company that is burning as much cash as NIO? Keep this in mind for when we talk about the financials. The counter argument for this is that many people in China live in condominiums or apartment buildings, so they won't be able to install an at-home charger like many people in America normally would. Thus, a valet service is needed, and so are other things like NIO Power. Now we can talk about the batteries, and this is actually pretty dope. NIO claims that they have created the first battery swap technology of its kind. What you do is when your car's battery is almost dead, you can go into this little pod and your battery will be unscrewed from the bottom of your car and replaced with a completely fresh one all in 3 minutes. It's currently faster than, say, a Tesla supercharger and it only takes up the size of about 3 parking spaces. As of a couple of weeks ago, NIO had 135 battery swap stations across 59 cities in China. Since the beginning of April of this year, NIO has been putting out 1 new battery swap station per week, putting them on track to make 50 plus new battery stations in 2020. Lastly, since first rolling out this product, they've completed over 500,000 battery swaps. NIO Power, these battery swapping stations, are absolutely key to fully understanding NIO's business for 2 main reasons. First, these battery swap stations have earned NIO the support of the Chinese government, more specifically, China's Ministry of Industry and Information Technology. To understand why this government support is an advantage, we need to back up just a little bit. China would give out government subsidies to encourage the driving of EV vehicles. In other words, they reward people with money for driving eco-friendly cars that are made by NIO, Tesla, etc. But China's end goal is to slowly scale back this subsidy program so that the EV space can grow organically without the help of government spending. Aside from continually reducing the subsidy amount, China also created a price limit, saying in order to qualify for this subsidy, your vehicle must be sold for less than 300,000 RMB or about 42,000 US dollars. Tesla actually had to cut their prices for their cars in China because of this rule, and this might be concerning for NIO as well if it weren't for the fact that the Chinese government has their back. Got your back. Cars with battery swap technology still get the government subsidy at least through 2022, and battery swap cars are unaffected by this price limit. In other words, NIO, because of their battery swap technology, can still sell their cars above this 300,000 RMB limit and still receive the subsidy. Now, I said there were two main reasons why NIO Power and this battery swapping tech were key for NIO. The second reason is that it could give birth to a whole new arm of NIO's battery as a service business. This effort will be a spin-off of NIO and be led by a completely new company called NIO Energy. They will be what's considered a battery asset operator, offering a battery as a service business model to serve all sorts of battery needs. The reason why this is such a big deal is because it opens the door to renting batteries for your car. And you might be wondering,
why would you want to rent batteries for your car?
well, because according to this article, batteries account for half the price of an EV car. And that's not all. Not only would renting batteries dramatically reduce the upfront cost of purchasing and owning a NIO electric vehicle, but it would also make it much easier for you to update your batteries as battery technology improves, because all you gotta do is swap them out. NIO Energy, when it is formed, is already expecting an investment from China's largest lithium-ion battery maker, contemporary Amperex Technology. So a lot of exciting opportunity there. I'm just scratching the surface with this video, so definitely a place for you to do some more due diligence if you want. All right, now for part 3, NIO's brand. Is it working? Is it not? Let's see. As I mentioned earlier, NIO is trying to build a Tesla-esque or Apple-esque brand. And when talking about building brands for NIO, there's no better place to start than with NIO House. From what I understand, they have a building to take the NIO lifestyle beyond the car. And this house has a lab, library, cafe, joy camp, whatever that means, gallery, living room, and forum. I'm not sure why they named it the NIO House. The only thing my house has in common with that is a living room. I definitely don't have a forum anywhere. But the idea of an exclusive building just for NIO users creates a much more elevated level of exclusivity and quality to their overall brand. This is certainly a more unorthodox move. There certainly isn't a Ford Joy Camp, but I like the idea. I like what they're doing with it, and I like the mission behind it. But the question is, what about the financials? Just by looking at it, it looks like it's a lot of upfront cost, and these buildings do not seem to be very heavily monetized. NIO also has NIO Spaces, which are much smaller than NIO Houses and are more focused on driving sales. It's like a fancy showroom. When I first looked into NIO, I was a little confused because management acknowledged that NIO Spaces were much less expensive and also were much more effective at driving sales. Yet they had 22 NIO Houses and only 48 NIO Spaces. I would have liked to see a lot more NIO Spaces relative to NIO Houses.
And guess what? That's exactly what they did.
As of July 10th, NIO had 22 NIO Centers, aka houses, and 108 NIO Spaces. And from my interpretation, this expansion has already proven to be beneficial to NIO's brand. 69% of NIO's recent orders were through referrals, which is like word of mouth. This is up from 45% in 2019. In other words, the NIO brand is certainly building some traction and loyalty. And now this is probably the meatiest and most important part of the video right here. Part 4, their juicy financials. Off the bat, you should know that for a while now, NIO has been losing money on every single car sale. This is their annual report. Look at vehicle sales, then subtract the cost of vehicle sales. The fact that the cost of vehicle sales is higher than revenue from vehicle sales is no bueno. And their margin on these cars actually got worse last quarter. This is from their Q1 earnings report. Vehicle margin was negative 7.4% compared to negative 6% from Q4 of 2019 and negative 7.2% from a year ago. And I know, Neo Bulls, just give me a second, I'm getting to it. However, some recent breaking news may have just changed the game. There have been some rumblings in the Twitterverse that Neo is expected to post a positive gross margin for Q2 2020. Now, I'm not confident enough in my source to present this to you as a true fact, but here is what I did find after doing some digging, and let me throw that into Google Translate for you. Earlier, it was said that Q2 gross profit of the vehicle must exceed 5%, and I believe this is what they're referring to. Then it says, overall gross profit is expected to exceed 3%. So was Neo able to see some positive gross margins for their vehicles in Q2? Well, they did have some stellar delivery numbers. For example, they delivered 3,740 vehicles in June, which is up 180% year over year. But keep in mind, this is from a Chinese article translated through Google Translate, so please take it with many grains of salt. Now back to the rest of the financials. Remember how I told you to keep in mind their valet service, which didn't really make much financial sense to me? Well, here's why. It cost Neo $133 million to generate only $65 million in quote, other sales, which includes their services. And I understand that companies nowadays in their growth stage are kind of allowed to burn some cash, but Neo's been around for 6 years and they've burned more than $6 billion. Now, in terms of their Q1 balance sheet, in Q1, they had $899 million in current assets and $1.7 billion in current liabilities, giving us a current ratio of about 0.52. And remember, we usually want this above 1 to indicate near-term financial health. But once again, all hope is not lost. These numbers are from Q1, and Q1 looks so bleak that potential customers of Neo were hesitant to buy Neo cars because they were afraid Neo would go out of business. However, since Q1, Neo struck a $1 billion government bailout from a local Chinese government, and they also struck a $1.5 billion line of credit deal with 6 Chinese banks. Let's talk about this in the final section of the video. We're almost there. Part 5, Neo's financing. The local Chinese government of Hefei, the capital of the Anhui province, came in to save the day with their $1 billion deal. Hefei's local government announced that banks backed by Hefei's local government will pump $1 billion into a Neo subsidiary called Neo China. Let me explain what Neo China is. So we're just going to call the banks that are backed by Hefei the investors within the context of this part of the video. So here are the investors, and here's Neo, and then here is Neo China. So the investors are injecting $1 billion into Neo China, and then Neo is putting their entire business of Neo into Neo China, as well as $600 million. Just think of it as the investors and Neo merged into one thing, and they just needed to give it a name, so it's called Neo China. And Neo walks away with about 76% ownership in Neo China, and the investors get about 24%. And it doesn't stop there. Neo got a $1.5 billion line of credit from 6 Chinese banks. The 6 banks were the Bank of China, Agricultural Bank of China, Industrial and Commercial Bank of China, China Construction Bank, China Industrial Bank, and China Merchants Bank. Sounds pretty government-backed to me. The key takeaway here is that in their Q1 earnings report, Neo didn't even look like they were going to survive as a company. But since then, they've gained a lot of financial firepower and the support of the Chinese government. But here's the thing, we still don't have a good idea of what Neo's balance sheet looks like now, so there's still a reason to be cautious until Q2 earnings. There has been a lot of capital raised recently, which is great, but I personally may want to wait and see what the Q2 earnings bring to show and tell and kind of reassess the situation from there. That being said, I did start a small position in Neo recently, but again, I want to wait for Q2 earnings and see where the company really stands financially after all of these deals. I still treat Neo as a speculative play. I'm not going to allocate too much of my portfolio to it, but I definitely think it's worth the investment. And in fact, Neo is not just a hype stock, in my opinion. It's a very long road to net profitability, but at a market cap of just $14 billion, I think there's a lot of room for growth, especially if they can execute on Neo Power and that whole battery as a service industry. And it also doesn't help to see that the Chinese government seems to want NIO to succeed. And they have a bit of a different governing style over there in China than we do here in the US. So I'm sure they could do a little more in terms of helping NIO. I'm certainly going to hold this one as a very long-term investment, but if there's a huge spike in price, like up 30 or 50% over the span of a couple days, I might trim, rebalance, and just try and keep things realistic. But ultimately, I'd rather never sell. Unless, of course, there is a fundamental change to the company. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and read our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily updates on my portfolio, stocks I'm watching, and all of that good stuff. Thank you so much for watching at this point in the video. You are the real MVPs. Don't forget your peace and thank yous.